a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hey everyone, Eric Dutram here for Zacks.com, coming to you with the latest ETF news and analysis. Today we're looking at a special new fund from Ark-Invest. This company is known for its lineup of innovative funds, and they just came out with a 3D printing fund. PRNT is the symbol here. Now, this is an area where investors saw huge gains 3 to 5 years ago, and a lot of investors out there thought this was going to be the next big thing in manufacturing. However, 2 to 3 years ago, we saw huge losses for a number of companies in this space, and this really fell by the wayside. A lot of investors have really given up on 3D printing over the last 2 to 3 years. And who can blame them given some of the returns we've seen? Now, you might be asking, Eric, why would I want to invest in a 3D printing fund given all these sluggish returns we've seen? But if you look to some of the recent trends we've seen, you'll notice that the growth rates for a lot of these companies are actually pretty impressive now, and we could see a return to strength for this 3D printing market. For example, the 3D printing space right here, we can see it's got about $4 billion for its total value right now, but a lot of analysts out there believe that we could see growth to $12 billion by 2020 or even $21 billion by 2020. And if you want to believe this very bullish McKinsey forecast, we can see almost $500 billion by 2025 for the total value, a roughly 50% compound annual growth rate. Now, this might be a bit too bullish, especially that $500 billion mark, but it doesn't really matter because we are seeing a lot better trends in this 3D printing space, and that's probably why Ark-Invest has launched this 3D printing product. Now you might be asking, well, what kind of companies are going to be in a 3D printing fund? Well, the product has about 50 stocks in total, and it does use an equal weight method, so we're going to get a wide variety of companies, but they're all going to be weighted roughly the same. You might have heard of some of the companies we have in the portfolio for PRNT. A couple household names. First off the list is HP. This company is probably best known for its traditional printing, but then also for 3D printing veterans out there, we do have 3D Systems and Stratasys. Now, you'll also notice that there are a lot of other foreign companies on this list, so you'll be getting a lot of international exposure in this ETF. Could increase the volatility for some investors out there, so definitely a key thing to note. Now, another aspect to consider for the 3D printing fund is the sector breakdown and the overall exposure for this ETF. As we can see with this index holding chart, roughly 50% of the portfolio is in 3D printing hardware, and then we have about 30% in the computer-aided design and printing simulation software. This leaves very little exposure for auxiliary companies and those in the additive manufacturing space that aren't in those two key areas. So that is also something for investors to consider, that this might be a bit concentrated in both of those key areas of the market, and it might not give you the total exposure that you're looking for in the 3D printing market. Another key part to consider for this new ETF is the actual market cap breakdown and the sector exposure for the holdings in this fund. The 3D printing space isn't known for its giant large cap companies, and that's why we see a lot of firms in this space have medium, small, and micro cap sizes. That's why mega caps only make up about 3% and large is about 15% of the total. Meanwhile, technology and industrials account for roughly 80% of the total, so you are going to get a bit concentrated holdings when it comes to those two segments as opposed to the other sectors out there. So it's going to be a bit concentrated, but if you're looking for 3D printing choices, this is really your only pick. Now, if you're curious as to how some of the actual individual holdings have done over the last couple of years, we can take a quick look at some of the key companies, starting with 3D Systems. As we can see, the chart for 3D Systems is exactly what I was talking about at the beginning of the segment, where we've seen huge gains in the start of this last 5-year period, and then we've seen big losses in more recent times. And as you can tell from this chart, the company has a very difficult time when it comes to meeting earnings expectations. 4 misses out of the last 5 reports. So definitely a big concern for investors in terms of overall growth, and also in terms of the near-term outlook for this 3D printing stock. So you might want to look to some other names in the space, and that's why we're also going to take a look at Stratasys Systems right now. SSYS is the symbol right here. This company has a similar track record to 3D Systems, but the near term has been a little more promising. As we can see in the chart right here, huge gains at the start of this 5-year period, and then big losses here more recently, but there is some hope that shares have bottomed out, And hey, they've actually beaten in the last 6 quarters, so a pretty good track record there, including some increased earnings estimates. This may make the stock a better pick for investors who are looking for single stock exposure, but as we can see, the space is very volatile, and that's why an ETF might make sense for a lot of investors out there. Well, that's all the time we have for today. Thanks for tuning in. Make sure to come back next week for some additional ETF news and analysis. For Zacks.com, I'm Eric Dutram.